Today, I'm excited. Our guest, Marrion Cherian, is a managing partner and mortgage agent level 1 at mortgagebroker.ca. Marrion's perspective is unique because he's lived on both sides of the mortgage fence. He has real-world experience in banking and now in brokering. He served as the head of the broker channel for HSBC Bank Canada and brings 17 years of experience in banking into how he advises his clients today. So if you're wondering, how do banks think when they say yes or no, this episode is for you. Marrion, thank you for coming and welcome to the podcast.
Pleasure to be here.
So one thing I absolutely respect about you is when I called you the other day to have the prep call, as I do with some guests, you said to me, Clyde, I don't want to know. I don't want to know the questions. I just want this to be real. And I respect that. So now I hope you're ready.
Okay, let's go. Let's go.
All right. And so for the audience, this podcast is built for, I'm going to say kind of two different types of people. We built this one for the general public who is trying to make a financial or mortgage decision in a calm fashion, try to figure out what to do next. And for the industry professional who needs clearer language on how to communicate with their clients. Here's the big ideas all up front. When rates move, headlines get noisy, and most people don't understand the various opinions that they're being given or are coming to them. And with that being said, what I would like to bring to the table is what's actually happening right now in the mortgage industry. So why don't we start there?
Yeah, I would say for sure. So thanks for having me on, first of all. So I think at the end of the day, it's about separating the noise, right? So there's a lot of noise, headline media, one-line articles people read, and that's what they run with, right? So our role as mortgage professionals really is to look at the facts. I always say it's data before feelings, right? Data tells you the answer. Data is what Bank of Canada uses to make their policy decisions. Data is what banks use to make interest rate decisions. So it should always be data-based, not emotion-based, right? So what's happening today in the world, we're in a geopolitical issue, crisis, lots of noise all over the world.
Noise, like in the background, so I apologize.
Yeah, sorry, exactly. I hear that too. I was like, oh, that's good.
It's okay. So a lot of noise.
Yeah, lots of noise. But I think at the end of the day, it's you separate it, right? So what I did with a lot of my clients is we looked at history. History is not, it doesn't mean it's going to happen. It's going to happen exactly the same way again, but you look at history. The 2003 war in Iraq, it was the fundamental crisis was based on oil being an issue.
Yes.
What happened in 2003? Inflation hit. Oil prices went up. I think it was like close to $150 a barrel. Bank of Canada raised interest rates, but the economy was in a way better position then than it is now.
Correct.
They raise rates, market settled, everyone calms down, rates come right back down by 0.5%. And guess what? The war didn't end overnight. That thing continued for years. But was the crisis averted? The crisis oftentimes it's short-term thinking, right? So I think really at the end of the day, you got to push it all aside, look at the facts, look at the data, and you got to trust your gut, right? And I think that's what it comes down to from my angle.
Where is the fear actually coming from?
I would say, I don't mean to say this, but a lot of the fake news media, no, jokes aside. So, no, listen, the media needs a story, and there's lots of great stories today with the situation going on, right? So I think fear is often grounded in uncertainty or lack of knowledge, right? So our role as professionals is to actually educate. When you educate, you can separate fear, which ties back to emotions, like I said earlier. right? So at the end of the day, I mean, my feedback on fear is a short-term thinking. Facts and data is long-term thinking. So you put those two on the table, have your moment. Go through how you feel. Like I just renewed my mortgage.
Scary.
I've been variable and I thought it was the best decision. And then all of a sudden I'm seeing all these articles, rates are going to go up, inflation, this, that. But so I had my moment. Oh my God, I made a wrong decision. But then went back to the data, went back to the facts. I'm comfortable. I knew why my decision was my decision.
What are confident borrowers doing differently with that said?
I think confident borrowers, you got to rely on someone to be your like mentor, coach, advisor, right? I said to myself, I need to lose like about 20 pounds before the summer. I'm not going to be able to do that on my own. There's apps today that help you with that. There's personal trainers that help you with that. You're never going to get to your retirement goal if you don't contribute to your RSPs. How much should I actually be contributing to my RSPs depends on me having a plan. So what folks need today is a plan, not just a decision.
I like
Everyone's looking for decisions, but no one has a plan. Okay. That's where we come in, right? So that's my my aha moment.
That's your aha moment. All right. So let's do a quick timeout and let's explain this in plain English, okay? For the general public, the regular people that are listening, when people ask fixed versus variable, what are they actually choosing between and what are the trade-offs? So let's start with the fixed. What does a fixed rate buy you psychologically?
It buys you comfort. It seems risk adverse and peace of mind. I think those are the three fundamental things that a fixed mortgage brings you. And sometimes fixed is the right decision.
Fixed income?
Yeah, exactly. Fixed income, knowing, hey, this is going to be my monthly payment for the next, or biweekly payment for the next 30 years or whatever. It's 5 years now in Canada, right? 5 years, 3 years. So it's just the stability. A lot of people want stability, right? And fixed fits right into that. Is it the right decision? If you look from 2022 to 2024, it necessarily was not. But if you go back 50 years, probably was the wrong decision to go fixed, right? So it's stability over and being uncomfortable, right? Gotcha. That people are trying to avoid when they go fixed, I would say.
So what does a variable buy you then structurally?
So I think variable gives you the opportunity to take advantage of the current economic situations that happen today, future, and whatnot. What I always tell people is, and I've been a believer in variable, I always tell people is you need variable with a strategy. Everyone goes into variable because potentially, like today, variable rates are about 0.5% cheaper than fixed. Great, lower payments, right? Lower rate. That's the headline. Separate the noise. Let's get into, does this make sense for you? So what I tell clients is if you have the right strategy, so an example of a strategy is oftentimes we say, hey, listen, the spread between fixed and variable is 0.5%. Why don't you make your payments based on that fixed rate versus the variable?
Yes.
Number one. And
create
number
yourself
two,
your own buffer.
That's it, right? And then number two is think of taking fixed versus variable as an insurance premium. Is it worth it to pay an insurance premium, or is strategy important?
Exactly.
Boom, right? Put those two things together, you're likely going to take variable.
Well, you're reframing it for your borrower, for your client, right? Giving them true guidance on how to make the best financial decision for them.
Absolutely. And the other piece that we also, I always tell clients to do is run your, how many clients do you know that got a mortgage and has no idea or has ever seen their amortization schedule? We give it to them, right? We give it to them as part of our disclosures.
Yeah, of course.
No one actually reads that document.
Yeah,
right?
That's a problem.
But when you look at the amortization disclosure and you look at the table, this is where the idea that I shared about putting that 0.5% buffer and being diligent or being forceful, deliberate is the right word, at executing on your strategy, right? And variable also gives you the opportunity to not just put your mortgage in place today and not worry about it for 5 years. If that's how you do your mortgage, variable is not the product for you. That's why I tell clients. Yeah.
Well, yeah, but that's the variable. I look at it, and I know I've said this many times before. The real estate market is still a market.
Yep.
Just like the stock market. Absolutely. It's going to have its ups and it's going to have its downs.
Absolutely.
Now, trying to pair the right mortgage product with the real estate market, meaning you buy a home today or your mortgage is up for renewal, you need to choose the right mortgage product for you.
Yes.
And if you understand that you are transacting in the real estate market, you're going to have highs and you're going to have lows.
That's right.
That fixed rate is basically negating the highs and the lows.
That's right. Yeah.
Now, if that's the way that you want to go about running your mortgage financing, great. Then you're really focused on monthly affordability.
That's it.
And if that's what you're focused on and you're happy paying the premium, paying for the insurance like you said, then great, no problems.
Exactly.
But on the flip side, if you're willing to take that variable, you can benefit from the lows.
Absolutely.
Now, like we've seen in the last few years, there's going to be, the flip side's also true, right? When it's high, it's going to hurt, but all things that go up must come down. All things that go down
must go up.
Exactly.
But you know what, like one overlay I would put in all of this is the hybrid strategy.
I love this. Go ahead.
Right. So the hybrid strategy effectively, not all lenders allow it, but effectively it's taking a portion fixed, taking a portion variable.
Yes.
Right. So you capture the upside if rates drop, you capture the downside if rates go up.
Yeah.
So you kind of get both.
Yeah. And you know what, to the lenders that do offer that product, all power to them. And it's one of the reasons that, we continue to work with them today. And, whether we'll name drop or not name drop will remain to be seen. But, having the flexibility to have a mortgage and line of credit is also a great strategy that we can employ. But having the ability to also have a fixed rate and a variable rate mortgage in your mortgage financing stack is simply
it's huge.
Yeah.
It's huge.
All right. So let me ask you one more thing on this. Because I love this topic, right? Yeah. Because it's so relatable to everyone, right? Even industry professionals alike. Where do you feel people are getting it wrong?
Yeah, I guess I should have taken the prep. Where are people getting it wrong? I think, actually, you know what? I have a good answer for this one. I did a video actually recently, a little 1-minute reel on Instagram. And the girl who does my editing, I actually told her, I want you to put an overlay image of sheep. Okay?
Okay.
There's a lot of herd mentality.
Oh, okay. Love it.
Right? My neighbor told me this is what I should be doing.
Yeah. Yeah.
Or my buddy I ran at the grocery store got a rate of X. Why can't I get that? So it's herd mentality that damages consumer confidence, number one, and herd mentality that affects rational behavior when it comes to making the right decision. So I think that's the best way to put it. Don't be sheep, man. Like, make your decisions rooted in facts.
I love that.
Right?
Rooted in facts, rooted in data. From Marion's lips, don't be a sheep.
Don't be a sheep, man. Don't be a sheep. Don't be a follower. Be a leader.
There we go.
Lead with strategy.
Agreed, 100%. And I will take a second to even further that and say, make sure that you're surrounding yourself with people that can assist you in making the proper decision, right? All right. So you said something when I gave you a call the other day, and I'm gonna ask you to continue with the statements you made. So I'm gonna give you a second I'll give you a second to bring it back to the top. Okay. What you said was everybody sounds confident online. So who do you listen to? The banker or the broker?
So I was a banker. And now I'm a broker.
Yeah.
And I think as you said earlier, I had 17 years coming into the business. The last 8, I'll call it 2 years now, has been a learning experience. There's a quote that I use, and it's the best profit of your future is your past. Right? You learn from your past. You take it forward, and You adapt and you pivot. So I would say the natural progression of any mortgage specialist, and you talk to some of the executives at the bank, the big banks, they'll say is to become a broker. Brokers are like, there's experience on the table when you're working with a broker. How many bankers talk about the hybrid mortgage strategy?
They can't if they don't have it as a product.
That's true too. yeah, absolutely. But you know what I mean? So I think at the end of the day, I look at myself, like I even tell consumers, when you have a mortgage renewal, you don't have to work with me. I'm okay. Take the advice. I will help you negotiate a better deal with your bank because we work with all the banks. We know exactly what they can give the clients, what they can give our clients or their clients. So why don't you take the advice? Again, knowledge. Knowledge is power. We bring that knowledge because a lot of the brokers that do well in the business come with years of experience. Why would you not take that?
Exactly.
Right? It's like LeBron James. He's approaching what, almost 40?
41.
41, yeah. Like I used to be a big LeBron fan, not anymore, but at the end of the day, he knows how to take care of his body because he has years of doing it. Whereas you see some of these rooks coming into the league, they play a year, they get injured, they're off. How has LeBron been so consistent?
Yeah.
Because of knowledge.
Yeah.
Right? And I think that's really what the average broker brings to the table.
They should bring to the table.
They should.
Right? And, there are brokers that come in that, maybe they don't come from banking, but now they need to find a team, find a network that they can work with to gain that knowledge.
Absolutely.
Right? So that way, when someone trusts you with their mortgage financing needs, you have that support to help them make the right decision.
And I'll say this, right? Everybody, no matter how experienced you are, you need a mentor.
100%.
If you don't have one, like you're already behind, right? Like when the whole geopolitical issue happened, February 28th, I always remember that day. In my mind, like I started to panic a bit. And I remember, I'm like, what do I do here? Okay, go do your research. I called my mentor. I'm like, hey man, like, what do you think? And it's just tidbits of information. And he took me back to my guiding principles, which were stick to the game plan, go back to your research, go back to the data, right? So it's that mentorship is like really
needed.
A big part of success.
Yeah. I have yet to meet a successful person that doesn't have a good mentor, right? I just don't think it exists. Right. And I'm going to say I have many people that I utilize as mentors that I continue to call, even, sometimes maybe too much, but that's just, I want to know. Right. And when you need something, you got to reach out. Right. Yeah. But, and never be afraid. I want to throw that out there for a lot of people. Some people are just afraid to ask the question.
Yeah. I mean, look how many conversations you and I have, right? Sometimes you'll pick up the phone, call me. I'll pick up the phone, call you.
Yeah.
It's because we don't know the answer doesn't mean we're stupid. Like we're not. We just want to be better.
Exactly.
And we know who to count on to be better.
Exactly. So, and I don't remember who said this to me. So for whoever told me this, I apologize that I'm not giving you the credit. But a wise person once said to me, it's not always about what you know. Sometimes it's about who do you know? Yeah. Right? Who do you know? Who do you go to when you need that answer, right? So, yeah. And thanks for picking up when I call sometimes.
Of course, always.
All right. So give us the bank's lens on when a bank is approving or declining, what are they really protecting?
So, so I would say, every bank has risk appetite. It starts there. Okay. So you take the risk appetite as your foundation. That's the bank's credit policy. Then you overlay bank strategy. What areas of the bank do they want to grow? Do they want to grow their new to Canada segment? Do they want to grow their small business segment? Right? So that's part 2. And then once they have those 2 pieces in order, we go to part 3, which is pricing. Okay. So when a bank's making a decision, at the end of the day, it all goes back to that foundation, which is your credit risk, credit appetite. Right? So when you look at a file, and I remember I was saying on the lender side, would I lend this person or this client money if it was my money? I mean, I go back like 15 years. I remember a manager telling me this this was your money, would you lend it to this client? So what the bank has put in place to help guide those principles, so it's not just a Marrion or Clyde or John Smith sitting saying, oh, I don't like this person. We take out the emotion, get to the facts. So the facts on how they govern their decisions is credit score. Guiding principle number one. What has their history been with paying credit? What are their transactional habits? Sometimes, we have the banks coming back to us and saying, hey, we'd like to see the client's 6 months bank statement. They want to see how you manage your money, right? Because at the end of the day, they're giving you the money. They're lending you a whole bunch of money.
Exactly.
Right?
So what are you going to do? How are you going to pay for this? How are you going to support this? We're not here to lose.
Exactly. And they don't want to lose, right? And Canada's done, the Canadian financial system is very sound. I mean, like you think about the damage and what we went through in 22 to 24 with rates skyrocketing 6%, 7%.
Crazy
on
times.
an A mortgage, right? Bank mortgage. So, but we withstood it. Canadians pay. So that's a good thing, right? Canadians pay, default rates are still low compared to our global partners. But at the end of the day, I would say to summarize this particular key point is not all size fits all, not one size fits all.
Gotcha.
Sorry,
Yeah.
is the right
It's okay,
word.
gotcha.
Yeah. And there's a lot of gray in lending, right? So just because you're being asked a lot of questions as a consumer, it's okay. Like the bank wants to get to know you. They're lending you $3, $4, $5 million.
Exactly.
Right? And they want to be able to take those answers, align it to their risk appetite, and use the framework like credit rating, like bank statements, like income, understanding the sustainability of income, right? That's another big point.
Yeah.
To make their final decision. Right?
So don't get mad when your broker or banker asks you for bank statements.
Bank statements, or hey, I need a copy of your 2023 T4s.
What do you mean? It's like 2026. Why do you want to see these things?
Sustainability of income. So that was a big thing. So the regulator, I remember when I was still at HSBC, we used to actually get a report of any client where their year-over-year income had changed by more than 20%. So that's a rule of thumb, 20%. So the regulator comes and asks the bank, the CRO, the chief risk officer of the bank, and says, how did you make a decision? The client earned salary plus bonus. How did you make the decision to lend them money based on higher income? And that's when we have to unpeel the onion and say, okay, here's what they made in year one, here's what they made in year two, and here is why this income can be sustained. They are in an industry that is growing, like a medical professional. There's a demand. It's recession proof, right? So sustainability, I would say, is overlooked oftentimes, and that's what usually when I work with clients, I try to put that in my write-ups, so I can have my best shot at success.
Include sustainability in your mortgage write-ups.
For sustainability of income.
That's a great point. I hope you guys are listening. You had this line, and I'm gonna put you on the hot or in the hot seat for a second. You had this line that was funny to me. Something about I'm loyal, I'm royal. Tell me this one again.
Yeah. So and I may get a bit of backlash on this one, but that's okay. I became a broker for a reason, so I can speak how I feel, and then get to the facts after always. No, listen. A lot of clients are loyal to the royal. You know what I mean? They run the Canadian mortgage business, right?
Yeah.
50%, $50 billion a year in growth. Like I mean, I worked there for a few months after my HSBC days, and they've got an incredible system, right? Built. Algorithms, AI, everything, right? To uncover opportunities, help clients with renewal. But at the end of the day, I talked earlier about not one size fits all. It's very true with our banks. Not one size fits all, right? And I think loyalty at the end of the day should be to yourself. And how you root yourself correctly for the long term is to ensure that you don't stay too loyal to one partner. I mean, this is not like, when I worked at the bank, they would always say, this is like a relationship. Would you go cheat on your girlfriend or would you go cheat on your wife? Right? Like this stuff we used to talk about. At the bank, be like, and tell the client that, like, you want to be loyal. So they ingrain that.
Exactly,
They ingrain that into the consumer culture to say, hey, like, why are you shopping around? But for me, like, and the best part about us being in this business is we encourage shopping.
Yes. Go find out, get educated.
And then I overlay and say, and the best part is I will do the shopping for you, right? You know what I mean? So
exactly.
Like you've got a partner here that can do all of it, right? So I think at the end of the day, I have found, and maybe it's credit to the Royal Blue, they do an incredible job at sticking. It's sticky business.
Yeah.
Cross-selling, doing the whole 9 yards with the consumer. So the consumer thinks, oh, you know what? It's not worth the headache.
To even.
Yeah.
I'm not even going to think about it. I'm forget about look. I'm not going to think about it.
Exactly, right? But I always say, listen, we're one step ahead. We'll help you negotiate even better with them. And it's cool. You want to stay with them, it's all good. Like, listen, I respect people's decision. They're a great bank. They're the number one bank in Canada for a reason.
True.
They helped me start this career. Like, I wouldn't be here if it wasn't for them.
True.
So listen, we're good.
Yeah.
But don't turn a blind eye to the facts. And the facts are you should always explore your options.
And just to be clear, we're not attacking the banks, okay?
No.
We're simply explaining the different views, the incentives, the different systems, and the different viewpoints or objectives on the way business can be done, right? So let's move on. The one thing that I really want, our regular listener to understand is working with a broker is more than just rate shopping. And it's about guidance and structure. So what does a strong broker process look like today? Especially when banks, I'm going to say, hesitate or they say no.
First of all, a good broker will have a good operating system, have a good CRM, right? Client relationship management system. To take care of their clients' needs today and in the future, right? To stay on top of it.
So what I heard you say is you have a CRM.
Absolutely.
Okay, just
must,
check mark.
Yeah, must have, right? Number one. That's foundational. If you're not doing it, listen, I'm sorry, but you're in the wrong business, okay? like facts, that's fundamental, okay? But I would say I talk a lot with my consumers, my clients about like strategy. I go back to, it's all about strategy. And throwing things at the wall sometimes and getting people to think, right? At the beginning of the show, you talked about talk to an accountant, talk to a lawyer, talk to professionals. Yep. Our role is we try to bring them all together, right? Exactly. We try to bring all of this together. And you can only do that with experience, right? Experience in having relationships, experience in having helped clients through these situations or these scenarios, right? So when we talk about rate, like, I have a client call me and say, hey, I have a mortgage renewing at the Royal Blue, and what's your best rate? My first question is, first of all, amazing. Thank you for the opportunity. Before I can give you an answer on rate, I need to get to know you a bit,
exactly,
a bit more, right? Is it a rental property? Is it an owner-occupied property? What is your amortization? What current strategy do you have in place for your mortgage? Tax stemming, Smith maneuver, hybrid. Like, there's a whole it's a whole other world.
Exactly. It's not just 3.99.
Yeah.
What?
Yeah. And the best way I can maybe summarize an answer to this question is, I had a client call me, say, what's your best rate? I've bought my home, new construction. Bank X has offered me 3.89. And my rate was like probably the same, 3.89, 3.84, maybe half, 5 bips higher, okay? And what I said to the client was, let's do an app. So we did the app, ran all his numbers, tons of affordability, good disposable income. So I said, what kind of amortization are you looking at? Oh, 30 years. So I was like, so let me get this right. You're asking me for the best rate, but you want the longest amortization. Yeah, absolutely. I want better payments. So I'm like, so what's important then? Was it rate or is it cash flow?
Exactly.
Let's break down the noise. Let's separate. So he goes, well, the best rate is very important. And he went on. And I said, listen, what I don't want is if you don't do the mortgage with me, no problem. You're going to come back to me in 5 years or 3 years, whatever the term was, and you're going to ask me what's my best rate again. And I'm going to ask you the same question again. What is your remaining amortization? And if I hear it's 27 years, because let's say it's a 3-year term, I'm like, what have we accomplished?
Exactly. We missed something.
Yeah. What have you accomplished?
Exactly.
What have I accomplished? I'm like, so I'm going to help you educate you on amortization and the power of compounding.
Mm-hmm. Different conversation.
And so we completely got off the rate conversation initially. And then the conversation continued and it went back to, okay, so what is the rate? So I said, listen,
that's all they know what to ask.
Yeah. I'm like, listen, when you're serious to have a real conversation and you can understand the facts, call me. Mm-hmm. In the meantime, I'm going to send you an email. I'm going to give you my mortgage calculator. I don't want you to play around with it and see if what I'm talking to you is real talk or if it's a bunch of BS. Mm-hmm. So whatever happened, I remember it was a Thursday night. My wife had just prepared dinner. We were just about to sit down, and I see his message. I'm ready to have a real talk. You know what I mean? Like, so, and we never talked about rate again.
Exactly.
Because there's so many things you could do with your mortgage. You don't make one extra payment every quarter. Biweekly payment a quarter saves you 4 years off your mortgage. Change it to accelerate biweekly saves you another 4 years. Like, and we're stuck looking at rate.
Exactly.
That's the value of a broker.
I would say with that, the question I was going to ask you, what does good guidance look like in a volatile market? But that's what good guidance looks like in a volatile market.
Absolutely.
Having the real conversation, right? And don't just quote rate and send them off. No. Because, I mean, let's be real. They're just going to make the next phone call.
Exactly.
And ask the same question.
I had one of my agents call me on Friday, and he's running a lead program and whatnot, which is good, right? And so he's getting all these leads coming in. First, hey, so I got this client, what's the best rate? I'm like, okay, happy to answer your question. Let me ask you a follow-up. And I'm sharing this so those who are our clients and as well as our brokers to go in with advice and to go in with knowledge and be prepared, right? And he said, I'm like, so what's the client's mortgage balance? Oh, it's about 780. I'm like, okay. Do you know what he bought the house for? Oh, he bought it like 5 years ago. He said it's probably worth like 900. So I said, okay, so if he bought it 5 years ago, it's worth 900. His mortgage is 780. Is it an insured mortgage or is it a conventional mortgage? Oh, I don't know. So I'm like, okay, let's look it up. Yeah. Again, knowledge, experience. Mm-hmm. We went on House Sigma, found the home, saw the price he bought it for, uncovered through my conversation with him and his conversation with me that this client likely put less than 20% down.
Whole different conversation.
Oh my gosh. Rate different.
Oh my gosh.
Right? So again, like when you're working into our consumers out there, like when you're working with a mortgage professional, if you ask them rate, which is a good question to ask, I get it. So always ask the question. But if they don't rebuttal you with additional questions, you're working with the wrong person.
Thank you.
This is facts. Like that's
very, very true. Very, very true.
Yeah.
So what do you do when a deal doesn't fit the box?
Yeah, I mean, it comes up all the time. Happens. It's building a game plan, right? So the advantage we have as brokers is that if I can't do the deal, it doesn't mean I'm just going to dish you off to somebody else or avoid picking up your phone. Because I have a lot of clients complain that people do that to them, right? So I think it's just understanding the situation. I would say there's always a solution as long as there's equity, right? In our business, if there's equity, there's always a solution.
True.
Right? Other than if there's no equity, like we're not in the unsecured lending business, right?
No. But if there's no equity, I mean, there is still a solution. It's just the hard solution that most people don't want to admit to.
Exactly.
Which is you got to sell.
Yeah,
right?
You got to sell. That's true.
It's just
so actually, that is a solution.
Yeah,
You're right.
It's still a solution because it's a solution that allows you to reset whatever's left. You start over. Right?
Yeah, absolutely. Yeah, so we do a lot of on the B side, like B lending. They fit a really good niche in our marketplace because like I don't put a client with a B lender unless I have a game plan on how to get them out of it.
Yeah, you need an exit.
Yeah. Now there are some scenarios where the client will always they're in B because they want to do better tax planning.
That's a whole different conversation.
Yeah. But this is a client who doesn't qualify on the A side because due to maybe financial distress or financial hardship. So you take the strategy. And I think that's the question the consumer should always be asking is, what is my exit? And, I have clients, I kind of guide certain clients into that path where they'll ask me the question, so how do I get out of this deal? And then I know, hey, they're committed to this journey with me.
It's a great question. If they're asking you that, they've been listening.
Exactly, right? So, so I would say like we have options. There's always a solution for the most part, or sell their home, or sell your home. But I think it's just, it's on us to educate, right? Like I go to bed every night wanting to know that I did the right thing, and like if I can't sleep well at night, like why am I doing this? Like that's how I think.
We've covered market, product choice, bank logic. Now let's get into you.
Uh-oh.
So when we were talking, you may or may not have asked me to bring this up. Mm-hmm. You left a corporate role, non-commissioned, to enter the mortgage brokering industry with no database. What made you make that decision?
Simple. Bet on yourself. That's the short answer. I'll give you the long answer.
It's way more than that, man.
Yeah, I met with a few different. I still oversee the broker business for HSBC. Yes. Got a chance to see how different brokers operate, how they work, what gets, and see the data on the other side. It's all data, right? See the good ones, see the ones that are struggling, where the challenge is. So I met with a few different key franchise owners. And everyone said to me, "Oh man, you're going to crush this. You're going to crush it. You're going to crush it." And I'm thinking to myself, well, I don't have a database to go crush it. Like bankers coming in from the bank, they've helped clients, the last 6 years of my career, no database.
Yeah. You were behind the scenes. So I met with Eddie Cochiello, and I still remember I was in the HSBC building with my personal laptop on a Zoom, I think it was a Zoom call, and him and I were chatting, and he goes, for 17 years, how long have you been at the bank? I'm like, 17 years. He goes, for 17 years, you've done well. Your degree? I'm like, yeah. He goes, someone put a bet on you. The bank put a bet on you that you do well, which is why they kept you around for 17 years. At what point are you going to put a bet on yourself? And I'm like, you know what? This is it. And when you do something for yourself, you're going to go even harder at it. Of course.
Because you want to be successful. If you have those genes, at least.
Yeah.
So I said, I went back and I said, you know what? There was a time when I was in frontline sales, and I'm like, I've opened branches. I've started from zero to taking branches from zero to 100 million in a year. What did I do back then? And I literally went to my phone book, my address book on my phone. I started to write down names on a spreadsheet. And then I started to put their names, first name, last name, email, phone number. Step one. Step two, start calling these folks. Say, hey, listen, I'm thinking about going to this business. I would love if I can count on your support. Oh, absolutely, Marrion will support you. Everyone says that.
Of course. No one's going to say, no, we're not going to trust you with our mortgage business. You have zero experience.
Yeah.
No one's going to say that.
No, absolutely not. And I think, you had to go in with some good points. And I said, look, a lot of my clients have been reaching out to me over the years, and I literally say, hey, great question. I think you'll be a good fit with this bank. So let me send you to a contact I have, because I had contacts all over the place, and put them at different banks. And I said, but you know what I'm going to do? I want to be able to take this and actually help you myself. So can I count on your support? Yeah, of course you can count on my support. Great. Went, got my license, and called these folks back. Hey, remember I asked you a question, if I can count on your support? Well, guess what? Because you said yes, I went and got my broker license, my mortgage agent license, and I'm here now. So I'm counting on you to deliver on what you promised to me.
I'm counting on your support.
Yeah. You told me yes. So, and I know for sure nothing's coming up in the short term. And it's like, okay, no worries.
But you're having the conversation.
Having the conversations, put it in my CRM, do my follow-ups.
Oh my God, that word again.
Yeah, it's huge, man. and just, so it started off like, a few deals here and there. And then you do you, like you be you be genuine, you go to bed feeling good about your work, right? And then the referrals started flowing in, and next thing you know, and keeping track of everything, being deliberate in your work.
Don't let anything fall through the cracks.
Yeah, being deliberate.
The old saying, you only get one chance to make a first impression.
That's it, right? That's it.
Make it a good one.
Make a good one. And just being deliberate, and now I look back and I'm like, oh my God, how did I take that risk? Like I still say this to myself, right? How did I take that risk? But it was just about being deliberate, right? And check mark on my personal resume, because now the resume is for myself, to know, hey, listen, I could do it. And that's why I talk to a lot of the bankers, when we're telling them about why it makes sense, or suggesting brokering as an option for them as part of their career, as part of their succession planning. It's, I could do it. I have a blueprint. We have a blueprint in this business to help you succeed.
Exactly. Well, we've been there, literally been there, now doing this.
Exactly.
Right? So I think that speaks to who you are and I'm going to say, tenacity.
The first word I when we had our first kid many years ago. By the way, my wife, I did one of these a while ago, and she goes, "You never gave me any cred." So my wife is the backbone of everything I do. Like legit, she's the lifeline behind like the whole operation. Well, she holds it down for me. She holds it down, like legit.
I was saying to you earlier, I did a podcast with Roy Cacholo,
right?
Who's the pod, he's broker owner podcast, the Integrity Project, and what he said was your partner, your wife, is a multiplier, right? And I said that, like when he said that, I was just like, yep. Yeah. When if I'm doing well, she's a multiplier of everything that is amazing. But dare I not, do the right things, then she is a multiplier of those not right things, right? So yes, give her credit. Do it again.
No, she honestly, she holds it down for me. She absolutely holds it down for me. Like I know, like even coming to the business, and you may have to bleep this out, okay? You may have to bleep this out, but I was telling him like, I don't know, should I do it? Should I not? Like, and she's seen my career. Like, we actually met at the bank together. Like, so we kind of grew up in the bank system. And she literally said to me, "Stop being a pussy, go do it." Right? So you know what? Like, I'm like, I sometimes I'm having bad days. I'm like, Marrion, stop being a what? Just
that's just replays in your mind. Anytime you're doubting yourself, you're like, all right, I hear you, honey. We got this.
Yeah, we got this. Yeah.
So,
and it's generational, right? Like the part that people don't realize is brokering. This is like legacy.
It is.
How many brokers do we know that they're coming to the end of their career? And if you worked at the bank, you just say, okay, that's it. I'm counting on my pension.
Exactly.
Whereas you're counting on the multiplier of your book. Gary talked about it, 3x, 4x, 5x, whatever the number is. Like, I literally told my daughter, I'm like, one day you're going to be a broker. I told my son, one day you'll be a broker. I'm like, Daddy's got it all taken care of. He's going to hand you the book and you're going to take it home.
Keep it going. Keep it going.
So the key word to answer your question originally was hustle.
Oh, I thought it was don't be a pussy.
That's too. Well, I guess if you hustle, you're not, right? Like, So literally hustle, you just grind it out and hustle. Like you just got to get scrappy sometimes. And man, it's incredible when you do it. And if you feel proud about it, right? So
the message is,
don't be a pussy.
I think it's more make the decision,
yes,
commit to your decision,
yes,
and then execute against that.
Absolutely.
Right? And like you said.
Yeah.
Or actually like your wife said.
That's my wife said. Yeah.
All right. I want to go somewhere with the AI piece. Something that the industry is probably going to love or hate. But I'm not talking about using AI to write emails like we were saying before, right? I want to understand, how does an operator, a mortgage operator, mortgage agent, top producer, let's be real, utilize AI in his everyday business? What does that look like?
Yeah. So I'm going to give a shout out to DLC Group, on this one. Mad respects to Gary for what they've built. Okay. You can hate it, but it's hard. The facts are in the pudding. So you and I were in Whistler last year, and I was doing what every other person says. Oh, I use AI. I use the email Copilot and write it professionally and all that stuff. And that was as far as I went. And I was sitting there. I was sitting in the conference, and I'm thinking to myself, I need to get with the program, because I'm going to be one of those people where when I was younger, I'd be like, hey, this person, my dad, like, hey, you're not keeping up with the times. Like, AI is keeping up with the times, right? Like, so I listened, everything. I came back home, and I put my head down, and I said, okay, what is my process in my business today? And where can I find opportunities to cut down my personal time so I could give it to my wife that's holding it down at home, to give it to my kids so I can be part of their growing, their life as they grow, and give my clients the best possible experience on the strategies I've talked to them about. So I'm going to give you one example of something, and then the rest is potentially trade secrets. Book an appointment with me to learn more. But so the one that I talked about earlier was amortization schedule. How many clients actually know their amortization schedule? How many clients actually take advantage of the prepayment privileges? There's a reason why the Royal Blue offers the best rates in the country, because prepayment privilege is 10%, whereas most of some of the other banks are 15-20%. So that's important for you as a consumer. So I said, okay, how can I make this deliberate? So one of the strategies I put with AI was building out a system where once my client mortgage funds, and I've talked about amortization, prepayment, all this stuff, is we make it deliberate. Every 6 months, my AI assistant, Jessica, calls the client, and I tell the client, you're going to get a call from Jessica. Hey, I'm calling you on behalf of Marrion. He asked me to reach out to you because it may be time, if you already haven't done it, to take advantage of your prepayment privilege.
Amazing.
You need to be deliberate, because how many clients get to the end of 5 years and have never taken advantage of it?
They forget.
Even
Life
if
happens.
$500, $1,000 changes the game, right? So that's one example of how I've incorporated it, and automating the business. I think that's the big piece, is staying on top of your work. The email stuff is great. How many times, maybe I'll give you a second one. I work with some of my clients, and I'm doing a mortgage on a property that's coming up for renewal, and then I'm looking, they've got other properties, and I'm looking at the rate. I'm like, you're paying 5.5%, you're paying 6%. What's going on over here? Oh yeah, it doesn't mature for 3 years. And? Well, guess what? ChatGPT, keep it simple. You can go in there, pop, put in the story. It'll calculate the penalty. It will tell you the break even, and it'll tell you the solution.
Yeah. Should I do this? Yes or no? Let's find out.
And it's so powerful. So I literally have a folder in my ChatGPT section called client proposals, where like a lot of, you said, hey, you've done volume, you've been a producer. A lot of the business I've done is actually helping clients get better rates or get out of their higher rate situation by using AI.
Smart.
So imagine if I didn't go to that conference. I remember sitting at that conference saying, oh, man, was this $1,500, $2,000 worth it?
Yes, it was, Gary. Yes, it was.
It was huge, right? It was a significant multiplier.
Yeah, 100%. If you took the information and applied it.
Yeah.
And, I'll give credit where credit is due.
Absolutely.
I've been tinkering in the background myself, as I mentioned, since even before the conference, because, I had Copilot here and, utilizing it to do the pieces and building it out. And, after the conference, I'm like, but there's so much more. There's so much more to be done. And just looking at various ways to really make a difference. And wow, right? Yeah. And just hearing, again, I'm going to maybe go a little bit deeper than we should, but just hearing how others are utilizing AI in their business today has only further helped me come up with new ideas and, replicate those ideas and give forth, even some of our own. So I'm happy that you're willing to share.
Can I add one more thing?
Of course.
I think this is, so I talked to an executive at one of the big Canadian banks, and he said to me, because I remember when I built this whole thing, my mentor, I called him. I'm like, I'm thinking of all this. Like, can you give me your opinion on this matter? And he goes, listen, whatever you're doing, you better do it fast. He goes, because AI is not a nice to have. It's a need to have. Because if you don't do it, it is your defense. Those are his words. AI is your defense strategy in life. So if you don't put your defense strategy, you're going to a war without weapons. Like AI is your best kept secret. It's the most powerful, geopolitical issue going on. Right now. The most powerful missile in the world.
Yeah.
As a consumer, as an advisor, as a mortgage agent.
Yeah.
So
100% agree with you. And when I hear agents, broker, heck, when I hear my friends say, well, well, what's AI? What do you mean? Like, where have you? Do you live under a rock?
Yeah.
Like, come out from under the rock. Come see the light, right? And let's use the tools that are in front of us, so that way you can become more powerful.
Exactly.
You know, you can gain more access to information. You could be quicker. You could be more efficient, I guess is the best way I should put that. And like you said, utilize it to further help you build a business that is something that is beyond you, right? And, you know, you mentioned that, you know, in building your own system, you use it with automation and it's beyond the basic stuff, right? If I could just poke a little bit further, you know, what does it track? You know, what does it remind you to do outside of just the basic follow-up stuff?
So one of the models that we've built in is, and I say we because, you know, I always try to share with my team, of course, and whatnot, is leveraging like a tax damming type strategy. Okay. And I work very closely with my accountant. And if you're looking for tax damming strategies, please discuss it with an accountant. But however, with that all being said, so we built a model where, you know, Canada has the highest home ownership rate in the one of the highest home ownership rates in the world. During COVID, they said 1 in 3 purchases were investors buying. I think it was probably a bit higher. So the majority of clients we work with have multiple properties. So having a tax damming type strategy, and you can look it up, the rents have been terrible right now. Markets, you know, given the current state of the economy, rates have gone up given the current state of the economy, but still being positive cash flow. How can I accomplish that? Well, I introduce you to tax damming, and we've built a model with AI that can take your situation, compute out a result that says, instead of you paying X amount of dollars in taxes based on your marginal tax rate, you borrow from a product like a home equity line to pay the expenses of your rental property and take the cash flow you're getting from that rental property, the income, pay the principal, take the rest of it, pay your home down, your home mortgage, which is non-tax deductible, or take that money, invest it, take the dividend from that investment and pay down your home.
Exactly.
So it's a lot there that I just shared. But AI built this. I mean, you know, you needed to put a lot of idea to it, but now AI can take an example. Like you come to me and say, hey, here's my story. How can I, within about 10, 15 minutes, I can have a proposal for you. That's the power of AI.
That's amazing. And for, like you said, for anyone that hasn't heard of rental cash damming, take the opportunity to educate yourself because, you know, like I say, every time I'm on the podcast, these are ways that brokers add value.
Yes.
Right. And I'm not knocking on the bankers at all. I'm just stating facts. Right. And again, find ways to utilize the tools like AI to help you, whether you're in the industry or you're a regular individual just looking for more information on mortgages and how you can further benefit from what you're doing.
Couldn't agree more.
All right. So let's move on. Let's talk revenue as the last AI piece. Where has AI helped you close more deals or keep more deals or maybe revive deals that may have died?
Yeah, so I think it's helped me like build professional presentations, let's call it, or professional proposals. That's the word, proposals for my clients. And this was my trigger. How many consumers today have a banker that manages their mortgage for them? But how many people have a banker that manages their investments?
Exactly.
There's a reason, at least this is my personal opinion. I'm not saying this is true or not, but there's a reason why the banks manage investments and not mortgages. There's a reason.
Dare I ask?
Because at the end of the day, the mortgage is one of their most profitable products. Even though they may say it's not, it's the hook to get everything else.
Exactly.
Right? So at the end of the day, I want to be that sticky point to my consumers. I want to manage your mortgage, not just process the transaction.
Exactly.
So how am I going to manage your mortgage? I need to have the tools to do it. I need to be able to do my annual check-ins. I need to be able to follow up with you, with advice and value add. So having strategies like tax damming, amortization, crushing down your amortization, restructuring, connecting you with an accountant partner, connecting you with a real estate partner, depending on the situation, all become fundamental in the big picture. But I'm sorry, I went on a bit of a tangent and I forgot your question.
It was how have you utilized AI to help you make revenue, generate revenue specifically?
Yeah, exactly. So I think it's really putting all these strategies into models, modules or models. And I think the biggest one that has been a huge part of my success is there's a lot of brokers when they talk to a client, and everyone knows this. Hey, your rate's too high. You should be paying a lower rate. Maybe it makes sense to pay a penalty and break your mortgage. But ChatGPT can give you the answer in seconds. It has historical data on what rates were.
Exactly.
Yeah, it does it all, right? So I think that's been like one area for me that has been like really imperative in growing my book, this especially in the last like 8 to 9 months. Like I would say after like October of last year, literally after that trip, my business like blew up, right? And I think the second piece is just being having your systems to follow up with the consumer at key milestones and agreeing mutually on what those key milestones are. Because I don't want to be a bother. No. Like if you don't want to hear from me, I'm not going to call you. It's all good. Like it's okay, right?
It's okay. Everybody's different.
Like I can go pick up my son from school at 3 o'clock instead of call. Sorry to be a bit provocative, but like I could do that, right? So I just want to add value. If you want to take it, it's your. And AI helps. It's like the engine that funnels it. Right?
Yeah.
So
love it. Where do most people overestimate AI in their business right now?
AI has bias. I've learned that. Okay.
It agrees with you.
It agrees with you. So you have to tell it.
Don't agree with me.
Yeah, don't agree with me if I'm wrong, or tell me what I need to know. And like sometimes when I put my inquiry in, I say, give it to me real. So I think the over thing is you can be wrong unless it's data driven.
Yeah.
You can be wrong with strategy or advice if you don't ask it to be real with you.
Yeah. I mean, I think I've said this to the team a few months back, and I sent the team a note, as I often do in the middle of the night when I'm brainstorming. And I'm like, okay, guys, here's what I need you to program as like a key instruction in your AI moving forward. And it was like, do not agree with me. Tell me when I'm wrong.
Yes.
Be ruthless in your response. Break down, what I'm saying into 3 key points to make sure that you understand and I understand what we're asking. And then further that with, once we get into the strategy piece, break down the strategy at, I like to say, communicate at a grade 5 level so that I could articulate that to my client or my borrower. And doing that, I think, just further empowers you, because you are like, I'm not going to say making sure, but I guess a little bit of making sure that the information, the strategies that you're building are now rock solid, right? And I think we called that one my ruthless mentor is what I called that one. It's not nice, but hey, it keeps me honest.
Listen,
right?
Clients are going to be critical of your work, and I respect it when clients are critical of my work. And how they are critical is they ask lots of questions. They question what you say. And those are all good things. It means they're listening. Do the same thing to AI, right? It gives you a strategy. Like I asked AI, hey, with the geopolitical issues going on right now and my clients being in variable mortgage, what should be a good strategy? Give me 3 strategies a client should consider. And it wrote me this like
It's fine.
It wrote me this long response, and I was kind of like, convert to variable was this, or convert to fixed, was the solution. So I went back, I'm like, I'm going to challenge the answer. What are other ways I can mitigate my risk if rates go up by 0.5%? And that's when it came out, hey, maybe you can add a 0.5% buffer. Maybe you can, obviously the conversion is one piece. Perhaps for every, and again, this was a good one. It said for every, if you're on a 30-year amortization, for every 7.5% of monthly payment increase, you're offsetting your risk by a 1/4 point. I'm like, it wouldn't have given me that answer if I didn't challenge it.
Exactly.
So challenge it just like a client would challenge you.
So what you're saying is include some sort of instruction in your AI to, simply put, act like a client, right? Ask the questions. I'm a process engineering guy. They taught us ask why 5 times, right? If you want root cause, ask why 5 times. So why, right? And then you'll know really what we're dealing with, right?
Couldn't agree more. Yeah.
Perfect. All right. So what is one system you think every serious broker should build first?
I mean, you can pick your own system, I think, but I think the fundamental component of the system should be like it's the CRM. Like you've got to have a client relationship management. It's a relationship business. How do you run a relationship business without having a system that actually helps prompt you or guide you? Like it's fundamental, right?
Exactly.
Like we use, we have Gold Rush, and you can even do your stuff manually if you chose to. I use a system called GHL, Go High Level, and we literally, I've taken all my learnings in this business and created a whole bunch of automations, created a whole bunch of prompts on what they need to be so I can be better at my job. And then turn it on.
Exactly.
Right. So everyone does it differently. Like from all the brokers I've spoken to, some people just use the white label, or some create their own white label. Some use the one that the network gives us, which is also very good. Or you just customize and make it your own. And the cost of customizing is not significant. Like you can build a whole system that can really automate and take your business to the next level for like $3,000 or $4,000. It's one deal. It's worth it.
It is very much worth it.
Totally
Imagine not investing in your business, but then wanting your business to be profitable.
Yeah, no. It's.
What I'm going to say is, are you ready?
Okay, let's go.
We've reached the point in the podcast that I'm really, starting to love. And this is lightning round, right? So we started this a few podcasts back, and like I say to all my guests, don't overthink it. We're looking for short, sweet answers, and I'm not gonna say there are no wrong answers. I'm joking. Are you ready?
All right, let's go.
Here we go. What's overrated advice in the industry today?
Be loyal to your bank.
Be loyal to your bank. Fastest way to build trust with a new client.
Have a Google page with Google reviews that speak to who you are.
What do top producers do that most people don't see?
They invest in their business and they hire an assistant.
And
they don't sleep, sorry.
They don't sleep. Ain't that the truth, right? I think I'm up to so I said up. I think I'm up to 5 hours now, right? One small habit that changed everything.
Learn to let things go.
I like that one.
Gary says it. PETA?
Punt the pitas.
Punt the pitas.
Can
I say? Yeah, pain in the ass, right? Yeah. Like if you're on board, amazing. If you're not, like
punt them.
Yeah, punt them. Yeah, move on. Move on.
The funny thing is, I brought Luigi to the Owners U back in I can't remember, February, whenever it was. And when I asked him, as I do with any staff member when I take them, with me to a conference, is, give me your feedback. What did you learn? We want to make sure that this is valuable, right? And what can you implement in the business? And is one of the things, the first thing that was in his write-up was Gary's line, punt the pitas, right? Punt the pitas because they'll take away time. They'll distract you from the things that you should be doing, and there's no value.
They don't see your value. That's the problem, right? Yeah. Like if you can't see my value, I know what I'm standing on, experience. If you can't see my value, man, I know maybe it takes a bit of time to help you uncover that. Hence the Google page. Hence my my Instagram page where I'm trying to show.
You got people want to know who you are.
Yeah, right? That's fair, right? But once you do all that and the client's still questioning decision making, it's just what? Maybe I'm not the right fit, and it's okay.
Yeah, that's okay. Not everybody's for everybody, right?
Yeah.
All right, jumping back in. When things get bumpy, how do you reset your mind?
Honestly, maybe people don't know this. I'm a God-fearing man or individual. And sometimes the rough times take me back to my roots, which I often sway away from, which is my faith. And I think it's my foundation outside of my family. And I think that's what keeps me in check. So when things get rough, I go back to, you just got to trust God, man. Like, that's how I see things.
100% agree.
Yeah. If everyone has their own opinion and whatever you want to believe, but for me, it's just, you got to trust God and things work out. So
agreed.
yeah. Wasn't expecting that one.
No. Listen, I one thing I have learned since sitting in this seat is, don't come in with a predefined vision of people. And, I'm a Big Brother fan. Expect the unexpected.
Yeah.
So, I'll take a second and, I don't remember who told me this, but the old saying goes, if God takes you to it, then God will take you through it.
Amen.
Right? So
I love it.
Love it. And always have faith.
Yes.
All right. Last three. These ones are the closers. So take your time.
Okay.
All right. What does success mean to you now?
Looking at my bank account. I'm just kidding. You know what? It's just being proud of what the outcomes you give and provide to people. And many years ago, it would have maybe been looking at the bank account, but I think today it's just like being able to see the why behind what I'm doing, and the why is my family, my kids, seeing them grow up. Like that's success, honestly. And at the end of the day, if you're winning on that side, you're going to win elsewhere. Right. So I think that's what I would say is what success means to me. Obviously winning is the main thing, but the how is through family, through belief, and through doing the right thing.
Awesome. What's one thing you'd tell your younger self starting out?
I should have become a broker a long time ago. Honestly.
Don't miss 2009, 10, 11, 12.
I got my license in 2014. 2014. Yeah, I got my license in 2014. I'm like, yeah, I'm going to go do it. And I, like my wife said, I was a pussy. I didn't do it. Then I got it again in 2019. It expired.
Yeah, you were licensed twice before.
I got it again. I got my license. I was about to go quit my job. I was at HSBC actually. I wasn't in the broker business at the time, like managing the broker business. And COVID happened. And I was like, oh yeah, good thing I didn't go. Oh boy, was I wrong. And then this time I was like,
no, third time's a charm.
Gotta go. Yeah. So no matter what, like, I think I could have had a great career at the Royal Blue. The leader there, she's pretty awesome. So if she watches this,
we'll send it to her.
Yeah. She's actually really awesome. And they have a really good team there. But I think I wasn't gonna turn it down the third time. Like it was a must do. So die trying, I was gonna die trying. So if I failed, I failed.
But at least I tried.
Yeah, at least I tried. I could walk away with my head held up high. So
all right. And the last question. If everything disappeared tomorrow, how would you rebuild?
Just go back. As long as my memory doesn't disappear, I'd go back to how I started the first time. Do it all over again. Take all the learnings I've gained and all the experiences and just go right back at it, right? Because they say it's not how you fall down, it's how you get up. So if I had to fall down, I'd have to get up, right? So I think it's just going back to experience, learnings, starting all over again. It would suck, but it happens to people, right? I see it happen to consumers every day. And I tell them they need to go and do it again and start again and take all the learnings. So got to do it ourselves, right? If that happens, but hopefully it doesn't. But yeah.
All right. So let's take this one back from the top.
Okay.
Here's what we want everyone to remember. Noise is loud, but data is calm. Fixed versus variable isn't fixed versus variable isn't a prediction. It's risk versus a strategic decision. Banks and brokers, we're not enemies. they have different incentives that might lead to different advice. The win is commitment and picking a strategy that you can live with and then just execute it. And whether it's mortgages or in life, at some point, you just got to bet on yourself.
Great.
If this episode helped you get a little bit more clarity, or if it helped you understand a little bit more on how to have a good conversation with your client and where AI is an absolute must for business today, then share it with someone you know, because you never know who can utilize this information to help them in their everyday. And before I say anything else, Marrion, I want to say thank you for coming.
Appreciate it.
This, my friend, is a conversation that was long overdue, and I'm looking forward to the next one.
2 years, eh? I've been following up with you for 2 years to have this.
It hasn't been that long.
It's been 2 years.
Come on. It has not been that long. So before we sign out, I'm going to say, please make sure that you like, you follow, and you share. From myself, Clyde Bryant, and again, from my friend Marrion, before I leave, why don't you tell people where they can find you if they want to follow up?
Yeah, I'm looking at this camera here. Yeah. So you can follow me on Instagram. I'm actually just trying to build my social profile. So it's Marrion with an O-N, okay? Marrion_mortgagebroker.ca. Follow me on Instagram. You can check me out on LinkedIn. And pick up the phone and call me. Google me and call me.
The phone still works.
Yeah, the phone works. And I love having strategy conversations. It doesn't have to be sales. It's okay. We
It's
can
okay
just
to
talk
call.
strategy.
It's
Yeah.
okay to call.
Yeah.
All right. And with that being said, Uptown Experts, we're out.